confidence is way out ahead, and capital investment in the United States is beginning to catch up. There are some little disappointments in terms of where things might go on the trade front, creating a little bit of uncertainty for large cap firms with overseas operations. But by and large, the investment cycle is indeed strengthening, and that's going to reinforce the strength of the economy. There are questions about how long it can go on. We're not going to get tax cuts in 2019 like we did in 2018. But this is going to be a good, strong period. And the good news for the U.S. economy is that inflation is low for this late in a recovery. I do think that it's convincingly picking up. But again, if it isn't already high and destructive, then we're in good shape for 2019.
But we talk about corporate tax cuts. Are we talking enough about the change in the depreciation schedule and tax? I don't want to get wonky, but here's the thing: if I said to our viewers, you can go out and buy a car this year, and there'll be zero sales tax on that car. Theoretically, that might incent them to go buy that car
and pull forward.
That they would need it at some point anyway.
Right.
That's kind of what we're seeing in the business community. I mean, there could be this wave of business investing, which we have not expected yet.
I think the tax cut is more important, that you permanently, well, presumably
that was a nice way to say, Sullivan, you're wrong.
Nah, that's not, yeah, okay. So it's a permanent way to make the U.S. economy more competitive, for domestic production to be more competitive, is to cut the corporate tax rate. Now, again, on the depreciation, again, if you might pull some things forward, we've had that on and off over years. Not to say it doesn't help at the margin, but business investment is strengthening partly because we have a good, decent demand outlook, and we now have this improvement in competitiveness.
But often when we've had it after, like, say, financial crises where companies were struggling to stay in business. They needed this. Now we've got a strong business environment, strong markets, strong profits, and the bonus depreciation.
And also, you were right, that part of this is labor-saving technology. Now, what happens with the ups and downs of the business cycle and technological investment, these things are disconnected and all that. But
any sign we're going to slow down over the next year, Stephen?
Look, I think just the absence, right, of another tax cut and the fact that the Fed is tightening, all of this is going to maybe attenuate a little bit, but it should be a good, solid year in 2019 for the U.S. economy. Now, when we get there, and it isn't that far away, then you start thinking about how much further it can go. I mean, we've had a really, really big improvement in our labor markets already. But I don't think that you should worry about the next 12 months in terms of the U.S. economy's performance very much.